Hello, this is Robert. I'm a tax attorney here at TRP, and we are going to go over IRS Offer In Compromise, how to fill out the 2020 forms. Things to consider before starting. This guide covers offers in compromise for wage earners and self-employed individuals, based on doubt as to collectability. These are the most common and most easily accepted offers. Often, these get settled for less than pennies on the dollar. Forget all about the ads and percentages you may have heard on the TV or radio. Now, many businesses use 433-B OIC, which is not covered here. Sole proprietorships and disregarded single member LLCs taxed as a sole proprietor still use Form 433-AOIC, and we're covering that here. Now, if you have more cash than tax debt owed, probably not a good candidate for a doubt as to collectability offer. Not okay with the IRS looking at your financials in detail? Probably not a good candidate for the offer at all. Now, if it seems like you're just making it month to month and looks like you do not have a way to pay this back, then you're a good candidate for an offer. Some more things to consider before starting. Make sure you can save the forms you are filling out. Otherwise, it can get frustrating. If you're not sure what to use Adobe Acrobat Reader. We are not your attorneys, and this video or answering questions does not create an attorney-client relationship. However, still feel free to ask questions below or on our website link below, and we'll do our best to answer them for you.
So here we are on the forms, and this is coming from Form 656-B, Revision 4-2020, which is for April of 2020. And this form, the 433 AOIC, is for wage earners and self-employed individuals. So we're not doing the standard business offer and compromise in this guide. We'll have another video for that. This is for individuals and self-employed individuals, wage earners, people that owe from personal income tax. They owe personal liability for excise tax, trust fund recovery penalty, and you can, which is basically payroll taxes when personally assessed, and you can look in this little section up top to see if this qualifies for you. So Section 1 is all basic information: your name, when you're married, where you live, who lives in your house, their age, relationship, are they claimed as a dependent, are they not, and your spouse's info. Section 1 is pretty self-explanatory. Really don't need my guidance on that one. Section 2, also pretty self-explanatory. Where you work, the address of where you work, the pay period, you have an ownership interest, how long you've been there, and then the exact same thing for your spouse. Very basic information. Section 3, personal asset information. Round to the nearest dollar. Do not enter a negative number. If there's a negative number, enter a 0 instead. And up top is going to be bank accounts, type of bank account, the name, the account number, how much you got in it. For your second bank account, do it again. If you have more bank accounts, add an attachment, and you're going to put the total from those attachments on line 1C. Now here's the catch. They deduct $1,000 from the total. So we have $3,000 total in the bank accounts. You minus $1,000, and that's what you put on your line 1, $2,000. Now we're on to investment accounts. I did the example of stocks. So this example, he's got it at Fidelity. You want to put the institution name here, the account number, market value, then times it by 0.8. So 80% of what it's worth. So 10,000 becomes 8,000. Then minus any loan balance, if there is one. Then the equity is the equity is the 80%. That's what the IRS equity is. So we're going to have for 2A, 8,000. If there's more investment accounts, you do that second box there. Virtual currency. If you don't got it, skip that section. If you do, you check virtual currency, put in the type, the exchange that it's held at, if it's held at an exchange, or you can name the wallet if it's in a wallet, the email address used with that, if there's one associated with it. If there's not, you could put N/A. The location, the current market value. Here I put $1,000. Again, valued at 80%. Same theory as the stocks. 1,000 becomes $800. Then for lines 2A through 2D, they're going to be added up. So we have the investment, the stock account right here. The investment account with stocks in it, so that's 8,000. Bitcoin at 800, and we got 8,800 for line 2. Here we have an example of a retirement account. So this next box is retirement accounts. I put a 401k, the name, the account number, the current market value, again, valued at 80%. You multiply it by 0.8. So here 1,000 times 0.8, gives you 800, and I put a loan balance of 800, which means the equity is 0. So if you have the loan, it's going to cancel out that equity right there, and this one's a 0. If there's no loan, that would be 800. 3A through 3B, that again gets its own additional add up for the line 3, which is going to be 0. Now number 4, which is cash value life insurance policies. If you have a term life insurance policy, just put NA. This is not applicable to you. There will be some people, and not many, that have a whole life insurance policy. They need to fill this out. Put the cash value minus the loan balance and what's there. If there's more policies, same thing. And then 4 is going to be your total. Notice with the cash value of life insurance policies, there is not an 80% thing going on here at all. Now here's the real property section of section 3. If you don't own any real property and you're just renting, skip this section. The first part they're going to ask you is anything for sale. Most people are going to say no. Then they want a description of the property. Is it a rental property, personal residence? Most people are going to put personal residence. The purchase and lease or lease date, there's really not going to be a lease applicable here. So for almost everybody, it's going to be a purchase. The amount of the mortgage or rent payment, the date of the final payment, how the title is held. Most people's going to be joint tenancy for married couples. The location, which is basically the address. Lender, lessor, landlord name. Here's going to be the bank for the most part. The current market value, again, valued at 80%. So I put a $200,000 home value times 80% is $160,000 minus the loan balance. I put they had a mortgage of $170,000 left. That leaves 0 equity. If they had no mortgage balance, the equity would be $160,000 according to the IRS. Then there's a second section for any additional property. Most people filing an offer probably don't have 2 properties. Many of them don't have one at all. So a lot of people are just going to skip this section altogether, and that's totally fine. And that's where we put that. You see this line 5, that ends up being 0 because there was no equity. Vehicles. They want to see if you have any equity in vehicles. Most people don't. Some people do. And here we go. Vehicle make and model, the year, the date you purchased it, the mileage, the current market value, again, times 80% as if it was a quick sale value. So times the 0.8 gives you 80% of the value. And minus the loan balance. So here I had a $10,000 car, and at 80% it's worth $8,000. I put an $8,000 loan, so the loan balance is 0. If there was some equity here, say there was $5,000, you subtract $3,450 from that. So they give you an allowance of $3,450 per vehicle per taxpayer in equity. If there's only one taxpayer, you only get that $3,450 for one car. If there's 2 taxpayers, you get it twice. And you see that right here saying finally joint offer. They talk about that. So I put the second car as a Ford Mustang, and this one I put as an older year, just so you'll see example below when we get to the expenses, how that changes things. So we got 110,000 miles on this Mustang, and that makes it a higher expense that you'll see later. But I put the current market value of $2,000, valued at 80% is $1,600, and then you have that $1,600 minus the $3,450 equals 0, and their total vehicle equity is 0. The other thing is, if there's some vehicle equity, a lot of the time you can kind of explain your way around it. We've done that many times on many cases. Someone has a truck that's, say, worth $15,000 and it's paid off. Well, they need the truck for work, so we really shouldn't be considering that in the total. A lot of the time, they'll accept that. If you have vehicle equity, my standard response is we should not be including it, and I'll explain in the letter a good reason why it should not be included, and then go from there. Other valuable items, artwork, collections, jewelry, items of value in safe deposit boxes, interest in a company or business that is not publicly traded, etc. Most people are going to have nothing for this. So since most people are going to have nothing, you just put N/A. If you do have something, you can put it in there, put the market value, the 80%, loan balance, that same thing. They're looking for that quick sale value, and you put it in there. But the vast majority of people are not going to have one of these that are submitting offer, and they're just going to put N/A. For this section, value of remaining furniture and personal effects. Furniture, clothing, these kinds of things, used are not worth almost anything. So for almost everybody else, I just put furniture, current market value 1,000 times 8 is 800, $800. And most people's furniture is used. It's worth almost nothing. So add line 7A through 7C minus IRS deduction of $9,690. So they actually give you quite a bit of deduction on that, and that takes you to zero. But even then, furniture is really just not worth that much, and that's all most people are going to have, and they're not really looking for that. Now, box A, that's going to be lines 1 through 7, add it all the way up. So all these other boxes that we totaled, for us, it's just going to be the 8,800 and the 2,000. A lot of people are just going to be really adding boxes 1 and 2. But all those other final number boxes, 1 through 7, are coming together to then give you the total for box A, which is available equity and assets. And that's a very important number to have because you'll see it being used down below in the calculation. Section 4, self-employed information. If you or your spouse are self-employed, for example, file Schedule C, E, F, etc., or multiples of those, complete this section. If you're not self-employed, you can just skip this section entirely. You don't need to do it. So, answer the questions. Is your business sole proprietorship? For a lot of people, that's going to be yes. The name of the business, the address, the phone number, EIN, the website address, if there's one, put N/A if there's not. Trade name or DBA, write it in, or put N/A if there's not one. Description of the business, number of employees, frequency of tax deposits, average payroll. Do you have any other business interests? Most people are going to probably just have one, but if you have another one, enter that in and fill in this section. You're also going to want to know the type of business on that as well. Fairly simple, fairly straightforward. Then you're going to go on to section 5, which is business asset information. And here, up top, they're looking for bank accounts. What's in the bank? For this one, I put an example as $1,000. They also have virtual currency. Most businesses are not going to be holding virtual currency, but fill it out just like the one above, if it is, and they're also doing the 80% value on that. Then line 8 is going to be the total of these. So for here, we have 1,000. Business asset information for self-employed continued. So here I put a description of an asset. Trailer, maybe the business has a small lot. There could be a lot of things. Whatever it is, put it in here. If the small lot is under the business's name, you're going to probably want to put it in here. If it's under your name personally, you would put it above. And you're going to put the current market value, again, that 80% quick sale value, and what's left over, $800. Okay. What you get, though, is, so you go down, you total up, if you had another asset you put there too, you get the 100, you get $4,850 deducted. Similar to that $3,450 they take off for the car, they take off $4,850 for tools of the trade and that kind of thing. And that way, it then becomes a zero. Now that it's a zero, you can move down. And this is what I would do too. If I had a case where, say, there's property, it's just owned personally, it's not really under the business's name or anything, but I'm using it for the business, and say it was a small lot or something that would have value that'd be going up in the higher section, I would say, you should deduct $4,850 from it because I'm using it for business anyway, even though technically it went in that other section. I'm still using this piece of property for business, so take off $4,850. I would argue that, and that may work in some situations. Notes receivable, most people are going to say no. If there is, you click yes and you attach a list. Accounts receivable, most people say no. If there is, click yes and attach that. Then box B, available business equity and assets. So here it's $1,000. The trailer comes out to nothing after the tools and trade deduction, and then $1,000 in the bank account. They're not taking $1,000 off on the business account, so there's your $1,000. That's the available business equity from box B, and you'll see that being used below. Again, all these self-employed sections, if you're not self-employed, you don't need to do them. Section 6, business income and expense information for self-employed. Again, if you're not self-employed, you can go ahead and skip this. Now, if you've already done a profit and loss statement, you can convert that into monthly figures, put your income on line 17, your expenses on line 29, and you don't have to fill out the rest. Then you'll get your box C net business income. Also, if you have a Schedule C on your most recent tax return and it's pretty comparable, the numbers are pretty comparable to what things are now anyway, you can actually use the Schedule C figures and put those into this here and adjust them to a monthly basis, of course, and then put the information in, and then you'll get your net business income on a monthly basis right here for box C. If you don't have any of that, fill this out the best you can, as accurate as possible. Keep in mind, they're going to be looking at your bank statements to make sure this makes sense when they look at your bank statements. And they're looking for your net business income. Section 7, monthly household income and expense information. Now, this is going to go through the income and expenses and get to a leftover amount of money, if there is any, that they then use as a multiplier to help figure out your offer down below. So up top, gross wages, I just put $2,500 for the taxpayer and the spouse, but you can put gross wages, Social Security, if any, pension, other income. Some people might only have Social Security. And for our example, I just put $2,500 and $2,500. Additional sources of income, anyone else that might contribute, you want a list of sources, put it there. Interest, dividend, and royalties, distributions from partnerships, sub-S corporations, etc. Net rental income, if there's any rental in properties. Net business income from box C. That's the self-employment income from above. Some people may only be filling out the self-employment box. Line 36, the net business income. So self-employed people, that might be their only source of income. Some people may only receive child support, which is below there, and there's also alimony. Some people might just receive alimony. So it's not uncommon to have people fill out multiple parts of the section or just one. Then they get to the total household income. So we got $2,500 plus $2,500 plus $1,000 of the net business income from his security company, and he's at $6,000. That's our income section. Monthly household expenses. Now, first thing to note, for 39 and 45, which is here and here, you're going to put what the standards are no matter what. You spend more, you spend less, just put the standards in there. Sometimes you can get an allowance for additional food in these numbers if there's special reasons, like gluten-free, things like that. If you explain it and it substantiate the expense, that may work. Where do these numbers come from? And we'll start at the top of food, clothing, and miscellaneous. You go onto that webpage, which is here, and you scroll down to national standards, food, clothing, and other items. We got 4 people, $1,740. You got more people, you keep adding $378. And that's where that $1,740 comes from. Housing utilities. Now, there's also a national standard for this, but if you're spending way more or way less, you should put your actual expense on there. If you're pretty close to the national standard, just put the national standard because it makes it easier. And if you're going over, it's very likely the IRS is going to force you down to the lower number unless you got a good reason for going over. So, same page, the collection financial standards, housing utilities. I'm going to go down, find the state. Here we did Nevada. Then I'm going to find the county, Clark County. Then scroll over for how many people. 1, 2, 3, 4, 5. So 4 in Clark gives me $2,097. So say their mortgage was $1,750. Here it's $1,500. Okay. After all the heating and HOA and this and that, it's very likely that they're coming up to $2,097 from $1,500 from $1,750. If they were in an apartment at $1,750 and maybe didn't have as many related costs as a house, that still might come up to $2,097 with cable, heat, air when it's hot, all this kind of stuff. So if you're coming pretty close to that either way, I would just put the national standard. Vehicle, loan and release payment, put the actual payment. Vehicle operating cost. Now that's another thing that's going to be a local standard. And you can go back to that main page. Okay. Transportation. Local standards transportation. And you're going to look for the region. So we're in West region. And you're going to see if there's a county associated with your county that would make it any higher. So I'm not seeing any Nevada counties listed here, but we can just check. So say, for example, if you were in Los Angeles, you would do this Los Angeles County, or San Bernardino would apply to Los Angeles County, but there's absolutely no Nevada counties listed in here, so I'm just going with West Region. And West Region gives me 209 for one car, 418 for two cars. So I have 418, but here's the catch. For cars that have over 100,000 miles or over 8 years old, you can add an additional $200, and that's listed here. However, a lot of the time, they'll just take over 75,000 miles and over 6 years old. Technically, this is what it says, but over 6 years and 5,000 miles, seen them take the over 75,000 miles myself before. Okay, calculate your minimum offer amount, Section 8. Now, if you're paying the whole offer in 5 or fewer payments in 5 months or less, it's going to be multiplied by 12. If it's going to be from 6 months to 24 months, it's going to be times 24. Most offers we do are going to be times 12. And so I put 0 times 12 equals 0. That's the ideal number. If they had $100 left over, it would be $1,200 added to their offer. Then you're only choosing one of these types of the times 12 or the times 24. Then you're going to go down here, and the total amount of box A plus box B. So that's adding up all the available equity and assets. And that brought us to the $10,800 of personal, the $1,000 from the business, and we're at $11,800 plus our total from box G or box H, which is 0, and the offer amount. Then is $11,800 would be the offer amount they would want in most circumstances. And if you cannot pay the offer amount shown above due to special circumstances, explain on the Form 656 Offer in Compromise Section 3, Reason for Offer, Explanation of Circumstances. And you must offer an amount more than 0. So when all the numbers zero out, there's no equity or assets or anything, we're putting in $50 for most of those offers. Section 9, Other Information. Most people are just going to check no on all of these. Make sure they don't apply to you, but are you party involved in litigation? Most people's going to be no. If so, they want the information. Have you filed a bankruptcy in the past 7 years? Most people are going to say no, but if they have, there's the information. That's one of the more common ones people might be filling out. Lived outside the U.S. for 6 months or more in the last 10 years. You've been a party to any litigation involving the IRS or the United States. You're the beneficiary of a trust, estate, or life insurance policy. Are you a trustee, fiduciary, or contributor of a trust? Do you have a safe deposit box? If you do, where is it? What's in it? What's it worth? In the past 10 years, have you transferred any assets, including real property, for less than their full value? For most people, that might be like giving their kid a car or something like that. If you did do something like that, I would put it in there. They probably don't care about smaller things like that. Then it goes down here to, do you have any assets or any real property outside the U.S.? Do you have any funds being held in trust by a third party? So most people are going to say no to both of those. And that's Section 9. Section 10 is basically just signing it. You sign under penalty of perjury. Have your spouse sign as well. And then it lists all the applicable attachments. And I will actually have this put in a better, easier format for you on our website, and you can see what attachments you need. Or you can go ahead and look on here, and it's all just the basic stuff, verifying your income. And that's it for Section 433 AOIC. Now we'll go on to Section 656. So here we are at Form 656. This is part of the 656 booklet and is paired with Form 433 AOIC if you're doing an offer in compromise for wage earners and self-employed persons. First, they ask you, did you use the pre-qualifier tool? You can say yes or no, and you can check that pre-qualifier tool out at the link. It's not always accurate, and I wouldn't just base your submission of an offer on that qualifier, but might tell you if you qualify real easily too. So it's worth checking out. Section 1, basic information, name, middle initial, last name, social, spouse, physical address, mailing address if different. Is it a new address? And if it is, do you want them to update it? Individual tax periods. Now we're doing the individual one, so In our example, we check one of these. 1040, income tax, put all the years that they owe for. Trust fund recovery penalty, that's payroll tax that's been assessed personally. You want to fill that out. Information, fill the business name out here. If you're self-employed as a sole proprietor, but you do 941s and you owe the 941s, the 940s, other federal taxes, heavy highway use tax would go in there if you owe that. Then on to low income certification. So there's two ways to qualify for this. I qualify for low income certification because my adjusted gross income for my household size is equal to or less than the amount shown in the table below. Or I qualify for the low income certification because my household size and gross monthly income times 12 is equal to or less than the income shown in the table below. Basically, if you're making less than this on an annual basis, you can get a waiver. In our example, they did not, because they're making, $6,300 a month, so it's $70-some thousand, and the cutoff would have been $64,375 for 4 people in the 48 states, DC, and U.S. territories. In Hawaii or Alaska, you get more. So if you have 8 kids and you make $135,000 in Alaska, you're on a waiver. That means no fee and no down payment. So this business section we're skipping because we're not doing a business example here. Reason for offer. Doubt as to collectability. That is the most standard one. I did not add any explanation of circumstances because we're just going to offer, in our example, the proper numbers. Okay. If there was a reason why you could not pay the offer amount, you would add it in here. And so, for example, when you have car equity, something like that, I would add that section. I would add to this section and write in, this car is worth $10,000, but it's a truck. He needs it for work. It shouldn't be included. That's why the offer is lower. I would put that in there. Exceptional circumstances affect tax administration. That's another type of offer that's very difficult. So we're going as Dow's collectability. Even if you might qualify for this type of offer, if you qualify for Dow's collectability and you think you might have a chance, you don't know if you qualify for this until after you submit, but if you think you might have a chance, exceptional circumstances, but you already qualify for Dow's collectability, our firm goes with Dow's collectability because it's easier to get accepted. Now we're on to payment terms. So check here if you're paying 5 or fewer payments. That's the example we're doing. So total offer amount was $11,800 minus a 20% payment, remaining balance of $9,440. And rather than split that up into 5 payments, I always just put it at the end because they can pay it in parts anyway. Why stick them to that 1 month? Maybe they come up with all the money at the end of the 5 months. So I just put the balance this way at the bottom, and then within 5 months, they will pay that. Now, if we had the fee waiver and the down payment waiver, the offer amount will be here. You put a 0 here. The remaining balance will be whatever it is, and then I would put that total. So it'd be, say we had a fee waiver here. This would be $11,800, 0, $11,800, and $11,800. Periodic payment offers, we rarely ever do those, and most people are not going to do those. Section 5, Designation of Payment, EFTPS, and Deposit. So designation of payment, you may want to apply this to a certain year for a certain reason. Most people probably won't care that much about this, and if you get an offer anyway, this doesn't really matter that much. But if you owed multiple years on multiple things, you might, for example, want to apply it to the trust fund recovery penalty, and you could put that in there. And that's where the down payment would go if it gets eaten up. Okay, EFTPS, I think it's better to just send a check with the offer. It's easier, it's simpler. This is one of those situations where the online version is actually more of a headache. So I'd rather just do a check, and put the social on it, put what it's for the application fee of $205, and on the down payment, just put a check and put offer down payment, social security number. And on either check, you're going to put, application fee, social security number. So all the information is on the memo line. I would make copies of it all, send it in that way. Okay. Deposit, don't do a deposit. Just skip that section. There's no reason to do a deposit. Just pay your initial payment, pay the down payment if there is one. And if you got all waivers, don't pay anything. That's section 5. Section 6, source of funds. Where are you getting the money from? A lot of people loans from friends and family, loans from my uncle. If you want to name them specifically, you could. You don't really need to. You can just say something generic. In this case, they're actually going to be selling the stock accounts because that's where the equity is. So I'm putting that. They're not too picky on the source of funds, especially when you're doing these smaller amount offers. So making your payment, it's going to include separate checks for the payment and the application fee. And we'll have on our website all the check information, and I'll put that down below. Filing requirements. They want to see that you filed everything. I filed all required tax returns and have included a complete copy of any tax return filed within 12 weeks of this offer submission. So if you just filed, or say you had a bunch of unfiled years and you just submitted them, it might not show up on the IRS system, so they want you to include a copy with that. And they want to see that you were not required to file other stuff. So if there's something that was not required to file something else and it's missing, check you or not and put it here. Tax payment requirements. Most people, if you have a paycheck, make sure you're getting the right amount of taxes taken out of your paycheck. If you're not, it's possible your offer is just going to get sent back. If at the end of the year, it looks like the numbers are not going to even out. Self-employed. If you're supposed to be making estimated tax payments, make sure you're making them. I recommend even doing them on a monthly basis while your offer is pending. And you have to check to verify that. Or you're not required. A lot of people are not going to be required, to make the payments when they're not self-employed, so they can go ahead and check that. And this is regarding estimated tax payments. It's not regarding your taxes being withheld from your paycheck, but I should just mention the taxes being withheld from your paycheck should be the proper amounts as well. Section 7, offer terms. Now, this is just a bunch of text you can read yourself. It explains all legal ramifications of it. And full disclosure, I'm not your attorney at this point. I'm just explaining to you the process and how these forms are filled out. But the most important thing to get from the offer submission is when you submit that offer, the amount of time they have to collect on the debts is extended. So if your debts are expiring soon, you got a debt that's going to expire in a year from now, and you're self-employed and you're submitting an offer on it, your offer might sit there for 2 years. So they have to reply within 2 years. I've seen cases that get really close to them replying, getting really close to that 2-year mark on their reply. Why would you want that debt to last even longer? So sometimes the better strategy is put it in non-collectible and let the debt expire. The downside of that strategy, right now, most of the time, you're not going to be able to get the lien withdrawn. You'll get the lien released, but not withdrawn. And that's a whole nother discussion. But in most cases, if the debt's going to expire soon, a lot of time, better to just let it expire. And if you're not sure, you can ask a question below, or you can give us a call. We can go over it with you. Section 8, signatures. These are signed under penalty of perjury, so make sure you're as accurate as possible and to the best of your knowledge. You sign, put your phone, put the date, have your spouse sign, put their phone, and put the date. Section 9 is for paid preparers. So if you have us do it for you, we would be filling that section out. If not, you skip that section. And that's filling out Form 656.
Here's some additional notes on Offer in Compromise. Make sure you can show proof for expenses that go above the collection financial standards. Your case is simpler if your bank statements match your expenses. You do not need bank statements if you do not have a bank account, but make sure you have proof for business expenses and any expenses above the collection financial standards. Don't wait until you have enough money to settle or to hire someone, unless it's going to be about a month or less. Otherwise, if you are broke, now's the time to submit your offer. Do your best to get it in. If you miss something, they will ask for it. You wait too long and you make too much money later, you might not qualify for an offer at a later date. Now, here's more additional notes on Offer in Compromise. Be truthful on your application and the entire process. If you get denied but think you should have had your offer accepted, appeal. If you have questions, you can post them on this video's comment section or on our website link below and get an answer. Someone can take over for you later if you get lost. You can hire a tax attorney later to complete the case if you start it. Be prompt in your responses to the IRS for information. If you cannot get something in by a given deadline, call and ask for more time. Get help from expert tax attorneys. Give us a call at 888-515-4829 or go on our website, trp.tax, or just click the link below if you don't want to do it yourself. We order the information, check it all out, file what needs to be filed, and proceed on the best resolution. If we cannot help you, we'll tell you. There's no false promises for settlements. We only submit settlements when appropriate. Thanks for watching, and have a great week.